This is Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I'm on the line with Karl Setzer. He's a grain market analyst at MaxYield Grain, as well as Angie Setzer. She is the Vice President of Grain for Citizens Elevator. Thank you both for joining us this morning. I'd love to start off with kind of your overall take on the grain market right now. Karl, just because I mentioned your name first, how about we start with you?
Well, in the Western Belt here, we're seeing harvest pick up pretty good, and it's starting to be reflected in the markets here. We had some soybean harvest pressure over the last couple of weeks. This has started to lift a little bit. We've seen China step in here in the last few weeks, start booking soybeans a little bit heavier. A lot of that's coming from the seasonality. Usually in October, we start to see soybean demand start to perk up a little bit. The Brazilian real has appreciated 13% against the U.S. dollar, so U.S. soybeans are actually becoming the source of choice for buyers, and so that's helped soybeans out here quite a bit. Looking at the corn side, we're starting to get into a little bit more harvest pressure and on that commodity, and also last week's supply and demand numbers where the yield was bumped up a little bit. Is a little bit of a hangover effect of that on corn yet here, Brianna.
Angie, what would you add to that as far as your take on the commodity market and grain market right now?
Well, I think right now we have some really interesting attitudes that have developed. With soybeans, everyone's been so negative and bearish for so long here, at least over the last 6 weeks or so. There's almost a sense of relief when we don't see a renewed bearish story. You know, we've seen that pick up in exports that Karl mentioned. And even the USDA report last week, we saw a reduction in overall soybean carryout projections and things like that, you know. So we've seen to where not bearish is almost the new bullish in soy, even though we really are struggling to break that $9 resistance level in the November. The opposite is true in corn, where everyone's been anticipating this bullish story to kind of develop, that we were going to see production drop and carry out, you know, early on in June into the first part of July. People talked that corn carry out would drop below 1 billion bushel again. And, you know, so everyone's been anticipating this big bullish sort of twist, and we haven't seen it. So, you know, not bullish, even if it's somewhat neutral, is the new bearish for corn, unfortunately. And a lot of it's just based on expectations versus reality at this point.
So we just got some USDA data out. Angie, we'll jump to you. What were you seeing as far as, we'll start with, how about wheat?
Wheat numbers, I mean, it was just a continued confirmation of what we've been seeing, which is we have a lot of wheat. It's really interesting, though, just to see that the bulk of the wheat that we have, or the bulk of the global carryout, which is a record high number, is sitting in the hands of the Chinese. You know, they're sitting over in China right now, stocks are. But the funny part is the Chinese government overnight or recently here determined that they weren't going to do anything to change their wheat support price. I mean, they're still offering their producers $10 a bushel for wheat to grow wheat. Here in the U.S., you're seeing soft red wheat trade for around $5. So it's interesting to see, you know, that continuation out of China, who's sitting on, you know, over 50% of the world's wheat stocks, that they're going to continue to try to entice their growers to plant it. So we saw that and that's the hard part right now. Now we are dealing with some weather issues globally, or some ideas that we could see production fall back a little bit, just with some dryness in some areas and frost in others. But for now, just based on the numbers the USDA released on Friday, we're just seeing a continuation of large global stocks and no real concern at this point in time that we're going to run out of bread anytime soon.
Well, that is definitely some good news. Karl, we'll add to anything to add on wheat, and then let's talk about soybeans.
Well, that's, you know, Angie's the wheat expert, so I'll leave that to her. I really
Okay.
don't have much to add there.
Sure.
You know, the soybean numbers, I think that's what, you know, and the market was able to shrug it off pretty fast, which is a good sign, in that being the export number. New crop soybean exports cut 50 million bushels Total usage only down 40 because we did bump crush. I think that crush number at 1.88 billion bushels on soybeans is something we have to watch, because that's actually, even though it's only, it was only 10 million bushels more than what we put out in September, and really only 5 million bushels more than what was projected on old crop here. We're approaching what is termed industry capacity. So I don't know if we can crush any more soybeans, a significant amount, if the USDA comes in and starts, cutting exports a little bit more. Even though we are exporting quite a bit now, we do have quite a bit of ground to make up for the marketing year from the slow start. Sitting here right at 300 million bushels under a year ago on soybean sales. So while we do have some positive news there, we still have to go back to the fact that we have an 11.5% stocks to use ratio on soybeans right now. Farm gate prices pegged 8.40 to right at $10. So that said, soybeans, I think the downside is limited right now. But when we look at the stocks the United States has in South America, there's some production issues down there now, but them can turn around pretty quickly. All in all, I think our upside on soybeans is probably limited, at least in the short term here.
Angie, can you tell us a little bit of what we're seeing in corn?
Yeah, we've got basically the tale of two worlds going on right now. The Western Corn Belt, and it's been something I've been talking about since June. The Western Corn Belt had a pretty phenomenal growing season. We still haven't seen a heavy frost anywhere, so we were able to basically finish the crop in the field and not really run the risk of losing production on that side. The Eastern Belt ran into a lot of issues with flooding and just too much rain early on, and there's still a lot of questions as to whether or not that crop will meet the expectations of the USDA. We did see last Friday the USDA bumped yield up again to about 168, which was about a bushel and a half more than what traders were anticipating, but they did cut acreage, which is the one thing that a lot of folks, they just see the yield number and assume that production was higher, which it wasn't, because they did cut the acreage overall. From a cash market standpoint, we're still trying to figure out exactly what is out there from overall corn, just in the sense that we still have about 70% of the crop to harvest, or did as of last Monday. So right now in corn, there's a lot of questions. Like I said, we know that we have a good crop on the west side of the Corn Belt. It's the east side that really is going to be up in the air for a while. Until it's in the bin and we get a feel for stock numbers and things like that, it's really probably going to be range bound for a while. I think we'll find support in that 368, 370 range probably, and find a lot of resistance in the 394, 395 range. So it's going to be quite boring. I mean, it's good news for a lot of producers, just in the sense that, at this point in time, no one really expects the bottom to fall out of the market. But at the same time, it's going to be difficult for end users because they're going to have to try to bid up in those areas where the crop isn't as plentiful. They're going to have to try to get those supplies bought. So there is some concern over a slow export pace. I'm one of the believers that exports accounts for about 13% of our overall demand. So it's important, but it's not as important as soybeans, where it's over 50% of our overall demand. I think ethanol demand will be strong with the increase in the USDA funding blender pumps and introducing that 15% ethanol blend. That'll be positive. And then with the increase in livestock herds and things like that, I think our feed demand will be good. So I'm not overly negative corn long term, but at the same time, until we get to where we see either an issue develop with Brazil deciding either not to plant a bunch on the first crop or to not put as much in the second crop, and then we start talking about next spring planting, corn could kind of be stuck in the mud, is what I call it, where it's just same stuff, different day sort of trade for a while.
Karl, Angie had mentioned that sometimes you also watch the energy sector as it relates to the grain sector. Can you tell us a little bit about that and then what you're seeing in it right now?
Yeah, I watch, here in the Western Belt, where, and well, anymore across the entire Corn Belt, but the ethanol industry and energy
Mhm.
values really have started to impact corn more and more, especially with, when we're looking at, you know, uh, basically, a third, half to a third of our production going into one demand source. And sitting here looking at, you know, crude's been pressured heavily. We did have a rebound earlier this week and last week up to close to that $50 mark. It did drag corn higher. We've seen crude drop off a little bit down. We're trading right around that $47 a barrel mark right now. And we got gasoline futures have dropped. They're down 1.2% this morning. That starts to put a little bit of a hamper on the corn demand that we're seeing into some of the ethanol plants, because even with the cheaper corn that we've had, the weak energy market just weighs on it. If we could get crude and gasoline, which nobody wants to hear that from a consumer side, but if that could perk up a little bit, I think we'd see corn follow suit. We'd start to see our ethanol demand ramp back up. We'll get the production numbers this week. We've seen some pretty solid numbers on ethanol every week, but we've also seen imports, and the imports of that ethanol is starting to weigh on corn a little bit, just on the back burner there. Brazil is looking at cutting back their ethanol output here a little bit in their exports, so that should help us a little bit. I think long term, we need to see a little bit of a recovery in this energy complex. It would be a great benefit to, like I said, the corn from the ethanol side. And also, the soy oil, we don't hear too much about that. But if biodiesel, we can get that to ramp up here a little bit, like Angie had talked with the new standards, I think we could see a little bit more demand there and help maybe elevate that floor we're projecting for soybean values here.
We are on the line with grain analyst Karl Setzer and Angie Setzer. We've just got a couple of minutes left with you guys. Can you share your final commodity market outlook, what you think that commodity traders and just watchers should be following in the next, 3 months, 6 months, maybe throughout the end of the year? Angie, we'll start with you.
I really, when it comes down to it, I think the mindset or the idea that we're seeing of the continued keep the commodity market up, I think that's going to start to slow a little bit. I think we're discovering that even though the story out of China is that we continue to see the slowdown, and this is my opinion, the narrative is we continue to see a slowdown. The actual is we continue to see a pretty strong level of demand. So I think we'll start to see that wrap up a little bit. I'm not saying we'll necessarily see a complete turnaround and a rally to the high side, but I do think that we'll start to see some buying interest come back in, and some good reasons behind it. I'm not overly excited for soybeans long term, but I do think you'll see some excitement start to take place in corn here once we get through the range and get a better feel for what we're looking at going forward. And the same can be said for the energy complex and things of that nature. I think we'll slowly start to turn the Titanic around and maybe start to edge our way back up to where it's not the guy in the corner anymore, the commodity sector.
I like that analogy. And Karl, some final thoughts from you about the commodity market going forward.
I think we're going to see, I think we see this sideways trade range bound like we've talked here, through the end of the year. But I think a producer, really from a cash marketing point of view, needs to look at what's actually in front of them. And when the market presents an opportunity to make some profitable sales, get some coverage on, take advantage of it. Don't try to hit the home run, so to speak, in one shot. Just chip away at it and keep your cash flow positive. And I think until we can get through a little bit more known about the demand and the supply side here, that's about the best we can hope for now.
we've been on the line with Karl Setzer. He's a grain analyst at MaxYield Grain, as well as Angie Setzer. She's a vice president of grain for Citizens Elevator. Thank you both for joining us this morning. We always appreciate your outlook in the grain markets, and we'll have to have you back on again after we get the USDA data for next month.
Sounds great. Thank you.
Thanks for having us.